Lithium Americas stock pulled back on Monday, closing down 59 cents or about 6.5% at $8.45 per share. The move comes after an explosive week that saw the stock rally more than 50% on the back of the U.S. government's confirmed equity stake in Department of Energy loan restructuring. After Friday's 32% surge to $9.04, today's retracement looks more like a breather than a breakdown. In this update, we'll break down what drove the selling, why the story remains fundamentally bullish, and what investors should be watching next as LAC enters a new consolidation phase. The first point to make is that Monday's decline appears to be driven primarily by profit-taking. When a stock rises more than 30% in a single session, some investors are going to lock in gains. This is normal market behavior, especially for traders and short-term holders who are sitting on outsized profits from last week's momentum. The lack of new headlines or filings today reinforces that interpretation. There was no negative catalyst, no change in fundamentals, no downgrade, and no adverse update from the company or the Department of Energy. What we're seeing is simple market digestion after a parabolic move. It's worth remembering just how large last week's rally was. On Wednesday, Lithium Americas soared 23% after the U.S. Department of Energy confirmed a 5% equity stake in the company and its Thacker joint venture with General Motors. On Friday, the stock jumped another 32%, closing at $9.04 after heavy volume buying. That kind of move almost always invites short-term volatility in the following sessions. Stocks do not move in straight lines, and after such rapid appreciation, a cooling period is expected. At the core of this story remains the unprecedented involvement of the U.S. government in a domestic lithium project. The Department of Energy not only amended its $2.26 billion loan to Lithium Americas but also took a 5% equity position through no-cost warrants. This dual role as both lender and shareholder represents a major vote of confidence in the Thacker project and in the company's ability to execute. It also transforms LAC's profile, from a speculative developer into a strategic player in America's energy transition. That narrative shift is still playing out in the market, even as prices fluctuate. The project's strategic importance cannot be overstated. Thacker Pass is expected to become one of the largest lithium deposits in the United States and a key supplier for the domestic electric vehicle industry. General Motors already holds a 38% stake in Phase 1 and offtake rights for production. With Washington now directly participating, Lithium Americas occupies a rare position at the intersection of government policy, industrial strategy, and clean energy supply chains. This backing greatly reduces financing risk, but it does not remove execution risk, and that is what the market is starting to assess now. Today's pullback likely also reflects the shift in focus from headlines to details. The confirmation of the U.S. stake was the spark, but now attention is turning to the structure of the warrants, potential dilution, and governance terms. Investors want to know how much ownership may eventually be issued, what conditions are attached, and how these new relationships could affect decision-making. None of those details have yet been fully disclosed. Until the company files the corresponding documents with the Securities and Exchange Commission, speculation will continue, and short-term traders may use that uncertainty as an excuse to take profits. From a technical standpoint, Monday's close at $8.45 keeps the stock above key support levels. The $8 to $8.50 range now acts as an important consolidation zone. If buyers step in here, the stock could build a base for another leg higher. Resistance remains around the $9 mark, which coincides with Friday's close. A break above $9.50 would open the door to testing $10, an important psychological barrier. Conversely, a sustained move below $8 would suggest a deeper retracement, perhaps towards $7.50 or $7 even. But for now, the price action looks more like consolidation than reversal. The volume profile supports that view. Monday's turnover was lower than Friday's breakout volume, indicating that selling pressure may be more about profit-taking than broad distribution. Many investors who missed the initial rally are likely watching for re-entry opportunities on pullbacks like this. That dynamic, long-term buyers waiting on dips, tends to stabilize prices after sharp runs. It's also consistent with the behavior seen in other resource and energy transition plays following government announcements. Looking ahead, the next catalysts are straightforward. The first is the company's upcoming SEC filing detailing the terms of the Department of Energy's equity position and the associated warrants. This document will clarify the strike prices, time frames, and potential dilution effects. The second is any additional commentary from the Department of Energy or General Motors. Statements outlining project timelines, construction milestones, or future funding tranches could provide fresh momentum. The third is the broader lithium market. Spot prices for lithium carbonate have shown signs of stabilizing after a long decline, and any recovery there would lend further support to LAC's valuation. Investors should also keep an eye on analyst reactions. Several firms are expected to update their models to reflect the confirmed US stake. Price target revisions and coverage initiations could influence sentiment in the near term. The market's understanding of Lithium Americas is evolving rapidly, from a high-risk startup to a quasi-public-private partnership with substantial institutional backing. That evolution is likely to attract new categories of investors, including those focused on energy infrastructure and critical minerals rather than pure speculative growth. From a macro perspective, the government's involvement in Thacker Pass fits into a broader push to secure domestic supply chains for electric vehicles and battery materials. The Inflation Reduction Act and other initiatives have channeled billions into U.S. clean energy projects, but few have seen the kind of direct equity participation that Lithium Americas now enjoys. This makes the company a bellwether for future deals in the sector. If this model succeeds, other miners and developers may seek similar partnerships, and that could keep investor attention focused squarely on LAC. For long-term shareholders, Monday's dip should be viewed in context. After a 50% weekly gain, a 6% retracement is minor. The underlying fundamentals have not changed. The U.S. stake remains confirmed. The Department of Energy's $2.26 billion loan remains active and now more flexible. General Motors' involvement is intact. Construction planning continues. What's happening now is market normalization as short-term traders exit and longer-term investors recalibrate their positions. There are still questions to answer. We don't yet know the precise terms of the warrants or the potential dilution. We don't know whether the government stake will carry voting rights or oversight provisions. And we don't yet have a definitive timeline for the first major project milestones. But those are the kinds of questions that emerge once a story moves from rumor to reality. The fact that the discussion has shifted to terms and execution rather than viability is itself a sign of progress. In the weeks ahead, expect choppy trading as the market searches for equilibrium. The key is to watch how LAC behaves around support zones. If the stock can hold above $8.50 despite intermittent selling, that will signal that the market is confident in the underlying story. If it breaks below $8, the pullback could deepen, but even then the long-term outlook remains intact as long as the fundamentals hold. For traders, this environment offers opportunity but also risk. Volatility will remain high as new details emerge. For investors with a longer horizon, however, this phase may present a chance to accumulate shares in a company now anchored by both corporate and government partnerships. The presence of the Department of Energy and General Motors provides credibility and stability that few lithium developers can match. In summary, Lithium Americas closed Monday at $8.45, down 59 cents or 6.5%, following a week of extraordinary gains. There was no new negative news. The move appears to be profit-taking and consolidation after a major breakout. The broader narrative remains bullish. The company has confirmed government backing, a substantial federal loan, and a clear path toward becoming a cornerstone of America's electric vehicle supply chain. Short-term fluctuations are normal as the market transitions from euphoria to analysis. The next catalysts will come from filings, official statements, and analyst revisions. For now, the story remains one of strong fundamentals, growing strategic importance, and healthy volatility within an upward trend. Lithium Americas has entered a new phase. It is no longer a speculative bet. It is now part of a national strategy. Monday's decline should be seen in that context, a cooling period within an ongoing re-rating of the company's value. Investors who focus on the long game, rather than day-to-day noise, are likely to be the ones rewarded as this story continues to unfold.